A question and answer today. So, got a question from a client. What can you do with 35,000? And we'll just break that down quickly. So, 35,000, it's just a bit of consideration on this particular client. So, it's not a first time buyer, so it's got a property currently. So, he'll be buying the property as a second home investment purpose. So, that's the question. What can you do with 35,000? Because sometimes people think, I need 100,000, I need a lot more money to do what I need to do. So, being a client I know already, so it's based in Birmingham. So I would focus in that area. And even if you're not based in Birmingham, with that amount of money, I would definitely be talking. If you're London, I would say commuters area to London, that you can still get property at a lower price point. And that would be the starting point, because the idea is for you to build out of core areas, and then you increase and build a portfolio, and that allows you to move closer to the city or to the city center south. In this example, we're talking on Birmingham and its surroundings. So just a few things to say. I mean, I think with 35,000, I'll give some price points. I think we can get places around the Birmingham city itself, B1, B5 postcode. We can get Smithwick, B66. I'm saying Wolverhampton, it's not a bad idea. The location, the proximity to Birmingham is obviously making Wolverhampton a very good location. We've got Dudley at all as well, and we've got Walsall. That's WS1 to WS3. Those are possible places, I would say, if he's not buying exactly in Birmingham. So Birmingham or surrounding areas will be a good place to start for property value and deposit amounts of 35,000. So what sort of property would we go for? We're looking at property around 120, 150, giving us a deposit amount of about 30,000. Because there's a low value property, the stamp duty will be very minimal, and then we just have to work out associated costs. One thing I say to people is, do not just think about the headline figures, the headline numbers. Always think about the associated cost. So that's very important. So for this client, we will say that should be the ballpark what you are considering. In terms of returns, if you're not doing anything, any special strategy on it or any special things, you're just renting it out to a family, to a single old property rental, then you'll be expecting maybe around maybe 6%, 7%, up to 8%. So which is not a bad yield, considering that Birmingham is still Birmingham and the surrounding. It's a very good location. It's the second largest city in UK apart from London. I still believe that's still the record, and it's got a lot going on for it. So there is the train network coming into play for the area. So I think that's a high speed too. So again, making it a very good spot. So I always say, please invest before everybody else comes to invest. Yes, Birmingham, we might say people are investing, but it's still in its infancy in terms of there's still a lot of projects going ahead. There's a massive push in terms of a lot of regeneration happening, and the government is spending a lot of money in that area. The population demand is increasing significantly, and what that means is if there's a significant population increase, it means that there would be more need for property, and more people, more landlord would have to cater for that need, because the government is not going to cater for that need. So 35,000 is not too small. I mean, there will be properties you can get much lower. So even if you have lower amount, yes, there's a lot of possibility for that. So just mindful to say, when you're buying at the lower end of the stock, there's very little you can do to increase the value. So we've just talked about just going in the simple way, buying a property and then putting your deposit down, renting it out, and achieving that. The other thing people might consider is, depending on the area and the location specific to Birmingham that you're going for, you might be able to do things like Airbnb, short let, which means that you increase the income you're getting from the property. That comes with a lot of operational work, so you want to be mindful of that. But I always recommend, if you can have a management company managing that, they charge maybe about 14%, 18%. Usually, if that still works for your figures, then that is not a bad idea at all. You want to get locations that would give you proximity to short let types of business. So Birmingham has a lot of construction going on, a lot of people working in the city that don't live in the city. They're coming from maybe further up north. So there's a contractor pool that can actually make sense for short let. So that's another thing I would consider if you are buying and you have about 35,000 to put into the investment. So the other thing, if you want to go more advanced level strategy, would be thinking about what property can I buy that I would add value to. As you know, we do a lot in Auction 360 relating to auction. That is not the easiest route we recommend to anyone. But if you think you can add value to a property, then auction might be the right place. But outside auction, there are a lot of properties you can find on Zoopla, on Rightmove, that needs a lot of work. So you just need to think about it, that you would need to either do the refurbishment yourself if you are so inclined, or you have to pay someone to do this. So you have to make sure that you have done all your calculation right. But the good thing about that is it allows you to buy a rundown property, or property that you can add value to, and then increase that slightly. Based on that strategy, it might mean that depending on the level of uplift you're providing on the property, it might mean that you would need a short-term finance, which means you're buying, you're doing the refurbishment, and then from the exit, you refinance or you sell the property, you can then pay back the short-term finance, and hopefully you are still left with some chunky amount of profit, or you have built in equity in the property because you have increased the value. Increasing value could mean you're taking a rundown property, you're doing it up to a good standard. You're taking maybe a 1-bed flat, 2-bed flat, you're reconfiguring it with the permission of the leaseholders and getting their consent. I definitely would encourage you to understand that. I've just said that slightly, but there are a lot of work to this if you're reconfiguring flats, because there are existing structure in that place. You don't want to destroy what has already been built. So that could be some easy way in terms of reconfiguring flats. Sometimes it could mean that you're adding a 1-bed to a loft to something. All of this will cost you a lot more, but if you have maybe bridging finance to support that, and you have enough funds to be able to do the refurbishment, make sure that you're not spending too much on the refurbishment. So that will be an advanced strategy, which is not what I recommend to everyone. But if you know, if you've done it before, if you have someone helping you, then that could be something that works for you. So either you're buying in simplest form, just buying and already done a property and just waiting for the longer time, maybe 3 years, 5 years, to allow the property to work for you, because that's the whole idea. I always say to my clients, you're starting with one, but the idea is to be able to build your portfolio. So you can aggressively build a portfolio within a shorter time. Obviously, there's a higher risk to that, or you can just take the slow, traditional way of just buying, waiting a few more years, property increases in value, and then you take the equity from that property and then you reinvest. That would give yourself 10 years or 15 years or 20 years. That would mean from one investment pot, you can increase and multiply that over time. But if you are an investor and you want to take a shorter time scale to make things happen, then you want to find project that you can add value to, and then refinance to either take the equity and pay off all the associated costs, or sell and make profit out of that. So I hope that answered the question. If you have 35,000, what would you do? Would be looking in areas that's going to give much more rental yield, and just as well, that's still good enough that will give you capital appreciation. So for this client, is based in Birmingham, and I would rather keep its funds in Birmingham without having to go further out to places like Sunderland that you might get cheaper property. But it's based in Sunderland. There are still cheap properties around him, Warsaw, Wolverhampton, and all the likes. You would still get property in that price point. So this is just a quick high level. I've not done much research to know how much is property going on for, but those areas from previous clients we work with, we definitely believe there'll be something in there for you. So if you ever have any question, please DM me or drop the message in any of our channel, just talking about our channel. Please subscribe to our YouTube, Facebook, Instagram. We'll be bringing you more interesting stuff, more things around auction, more things around property investments, and things that you need to be aware of when you are thinking of investment in the UK. Either you live in the UK or you're a foreign investor, we are positioned to help you as well. So 35,000, if it was you, what would you do? Put it in the comment section. What location would you consider? What strategy would you use? Let us know. Let's share knowledge. Let's keep building ourselves up, and let's keep improving ourselves and our investment goal. Thank you for that question. Again, I would be glad to answer other questions that would follow, or other people that have questions that they just want a professional advice or a professional view on this. Just note, none of this is advice, because I don't know your situation. And when we are dealing with property, you need to be aware that if you do not maintain your mortgage on your property will be repossessed. So I always like to give a balance in terms of what we need to do. We're not here to sweet talk you into doing an investment. We want to make sure that you are thinking through properly when you're doing an investment. So this is just a quick glimpse. This is just a quick highlight, a response to a question, and it's not the full answer. There's a lot that we have not uncovered, but that would mean that you have to do your due diligence properly. The locations I mentioned is not some location I have vested interest in, but these are locations that I am aware of in relation to Birmingham specifically. So thank you very much. We shall speak to you later. And thank you for asking that question, Mo. If you have any other question, or if you know how we can work together and support you on this journey, please reach out to us and we'll definitely help you with your mortgage, with your bridging finance, with recommending and introducing you to professionals that will support you throughout the property investment journey. That's what we believe. We believe that we should make things simplified for the clients and get them the result that they desire. Thank you.